some of the challenges that we have with software development. Firstly, institutions of higher education, we're constantly evolving, and we're trying to provide more access and flexible ways to provide access to deliver education. Lots of us have completion initiatives in our states, which includes trying to bring in non-traditional students, and so we're trying to really meet the needs of our population. So one of the things that we would urge the IRS to recognize is the complex manner in which we have to report qualified education and how we have to deliver that education. Some of the recommendations in the NPRM are difficult, maybe impossible to comply with. And for example, at Georgia State, we serve a very large population of non-traditional students. Many of our students are balancing full-time work with family, part-time jobs also, while they're pursuing their degree. So this means that we're constantly trying to find ways to accommodate their academic needs. And so we just like to have the IRS take this into consideration with regard to some of the recommendations that speak to determining enrollment and when a student is considered to be enrolled. Another issue that kind of piggybacks off of that is how complex our accounting systems are to match these different and flexible enrollment schedules and the different ways we're trying to provide access. And this is both for qualified tuition and required expenses and non-qualified tuition and required expenses. Our schedules academically don't necessarily match the tax reporting year. Many schools like Georgia State, we have thousands of codes to keep track of all of these different transactions that are either qualified or non-qualified that post to our systems. So in addition to our regular academic cycle, we are often dealing with students who are doing petitions and retroactive, different types of transactions. So we're posting qualified and non-qualified transactions year round, and could be one term for that was for a previous tax year or vice versa. So all these transactions, and this makes the complex calculations of these qualified and non-qualified charges a little bit more complex. One of the things that we also noticed is that there is a proposed new definition of what is considered administered and processed in terms of scholarships. And so we'd like to request that the IRS provide some better examples that are a little bit less straightforward. For example, there's one about Pell. We all know Pell is a scholarship. But there's figuring out what to include as a scholarship has always been a bit difficult. Our National Association has provided us with some guidance, which has been really helpful to kind of give us a checklist to determine this. But the new IRS proposed definition defines the act of accepting a payment that the institution knows or reasonably should know as a scholarship or grant, and then stresses whether or not the institution is a payee on a check or the student endorses it over to the school is not determinative. At Georgia State, we process literally thousands of checks that could fit this new definition, but they not necessarily should be included as a scholarship on the 1098T form. For example, we get tons of checks from parents, from grandparents. A lot of our students are really like, it's a family affair to send them to college, so they're getting a check from just about everybody is chipping in to help them with what their financial aid is not covering. And the other sort of important factor is a lot of schools, more and more of these payments are coming in via ACH. Electronic checks are outpacing paper checks. And so those are coming through our e-commerce system. So there's a lot of times no way to tell. And there's not really an example that addresses sort of electronic checks or different types of payments. And so it would be really helpful to have some a little bit more complex examples that help us to define this administrative process new definition. And lastly, one of the biggest challenges that we've had is just working with our software vendors to make the changes to our system so that we can accommodate the new regulations. At Georgia State, like many other schools, we post transactions for our spring term, which begins in January and December. So for example, we will begin posting charges for spring 2017 on Friday. And a lot of times it can take months and months and months. Even our software provider just provided an update, an upgrade for us last week to help with some of the new reporting requirements like the checkbox and regarding notification and other things, the formatting. So we need a lot of lead time to work with our software vendors so that we can implement these changes. And so, you know, that means well before December. So we're just asking, requesting sufficient transition time after the release of the final regulation so that we can work to adequately prepare. One of the biggest challenges, especially that we were kind of nervous about with this year, but we're very thankful that the reporting change payments was pushed to 2018. Thank you so much, because our software vendors hadn't found a solution, and of course we would be having to figure out how to change our accounting coding to make sure that it matches, you know, non-qualified versus qualified so that we could report it adequately, but we would not have been able to make that deadline had it not been pushed. It would have been a significant hardship on us to try and figure out how to configure our systems to report on time. And so we're just asking, again, in this situation, that we get sufficient time, transition time after release of these final regulations. So thank you so much. I again appreciate the opportunity to provide any questions and to provide a comment on any questions you have. I'd be happy to take.
So actually, Ms. Daniels, I have one question for you. You said you get a lot of payments and it's hard for you to identify whether they're associated with a scholarship or not. Is there a system that you use to keep track of scholarships where you would be able to identify what payments were associated with a scholarship?
Yeah, we have a process in place to identify scholarship checks. For example, we provide students with instructions on how to submit a scholarship check to us. Students, of course, don't always follow those instructions. So we have a way to code an outside scholarship so that we know, but if the student doesn't follow our instructions, it's not always easy. I mean, we've had situations, I'll give you a great example. A student, a third-party sponsor sent a check, and it was posted to the student's account as just a regular payment because there was no identification on it to indicate that it was from a sponsored account. And so we ended up, because we have a third-party sponsor accounting, you know, an account for the third-party sponsor, so we were sending them a past due notice saying, hey, where's the payment? And so once we found that it was miscoded, we corrected the coding. So things like that happen outside of our regular established policies and procedures. So we publish and we have an established way to code them properly if people follow instructions. It's the same thing like with our electronic checks, as I mentioned. If a student decides to submit a scholarship payment online as an e-check through our e-billing system, we may not necessarily know that that was actually a scholarship and not an out-of-pocket payment. So it makes it a little bit more complex if they don't follow our procedures.
Okay, thank you.
You're welcome.
Thank you.
Thank you very much.
Our next speaker is Joel Levinson.
Good morning. I've only prepared a few speaking notes for today. I wish to first and foremost express my appreciation to the IRS for today's public hearing and allowing the higher education industry to provide feedback on the proposed regs, which affect our tax reporting obligations. I look forward to the opportunity to partner with the IRS and addressing any concerns that we have, and certainly appreciate the opportunity to provide feedback and help with any guidance that may be published. Appropriately, being from higher education, I firmly believe that most of our concerns with proposed regulations can be solved through education and guidance published in conjunction with the IRS and the higher education industry. I'm from UCF. UCF, University of Central Florida, is a public institution in Orlando, Florida, with one of the nation's largest enrollments of approximately 63,000 students. We file approximately 55 IRS Form 1098Ts every year, We estimate that if the proposed regs are adopted without any changes, that number of 1098T forms produced would rise annually to about 85,000. My first comments I'd like to reporting and our philosophy behind it. Information reporting should be a simple, straightforward approach that should be completed with information readily available. The proposed regulations include what we like to call a payment application assumption, where college and universities are supposed to assume that payments first coming in are applied to qualified tuition-related expenses. However, that might not be the case, which is reflective of the student account. I think a simple solution to this would be if the payment application assumption goes forward, to adopt that as a safe harbor and allow educational institutions to report qualified tuition-related expenses which reflect the student's student account, so that institutions match the student account payment applications, and if they look up their 1090T, they can see the same information reflected. Information reporting shouldn't be confusing towards taxpayers. Obviously, if they were to receive a 1090T and then look up the nature of their student account and see the payment applications, if there was a difference, I think we could receive more phone calls than what we should be receiving. I'd like to also comment on the potential loss of the non-resident alien exclusion available for 1090T reporting. Currently under 1090T rules, if a non-resident alien student were to request a 1090T form, the institution would be required to provide one. The proposed regulations lose that exception, and now non-resident aliens are automatically included in 1090T reporting. I think the fact is under 25 Cap A, a large majority of non-resident alien students are ineligible for any of the education credits. They would have to make an election or be married to a U.S. citizen in order to be qualified to receive an education credit. I think that's going to greatly increase the number of 1090T forms produced by institutions that are going to be received by taxpayers that frankly won't qualify for an education credit, and will likely lead to more administrative burden for taxpayers, for information reporters, and for the service. We would like to see that exception maintained, and a possible solution would be to keep the exception as is, or allow institutions to have an exclusion for reporting NRAs if that non-resident alien student did not have a TIN or a U.S. Social Security number associated with them. I'd like to make a few comments on the TIN solicitation checkbox. As you know, the Trade Preferences Extension Act amends 6724 to allow education institutions to certify under penalties of perjury that we follow proper TIN solicitation procedures in accordance with 1092 rules. I think first and foremost, what's needed is the service needs to provide a uniform voice when it comes to this TIN solicitation checkbox. Specifically in publication 1220, which is where taxpayers find the language and the coding specifics for e-filing. That TIN solicitation checkbox indicates that we are certifying under penalties of perjury, that checkbox is certifying that the TIN is correct. That's not the way the law is written. The law is written is that we're certifying that we follow proper TIN solicitation procedures, not necessarily that TIN is correct. I think that there needs to be a consistent voice when it comes to that TIN solicitation checkbox. Additionally, we would like some guidance as far as when, in a reporting year, when a 1090T is produced, if a TIN solicitation wasn't made, do we also have to certify that year under penalties of perjury that would follow TIN solicitation procedures? For example, a first-year student, they fill out an application, and typically that's our first solicitation. If that student, for any number of reasons, doesn't provide a TIN, most institutions annually or semi-annually request a TIN. But if we have one and we've requested it in year one, in year three, if a 1090T is produced, are we still required to certify that that TIN is accurate and that we follow the proper TIN solicitation procedures, even though no solicitation was made under the assumption that the first year was correct? I'd like to make a few comments on foreign schools. The National Association of College and University Business Officers represents approximately 400 non-U.S. based educational institutions that are eligible to participate in the federal direct loan program. Strictly speaking, under the rules of 25 Cap A, U.S. taxpayers are eligible to receive a tax credit from these foreign institutions. Now, these foreign institutions are not under 1090 reporting rules. In fact, I'm not sure that the IRS has the authority to require 1090 from these institutions. Which brings up the further point of the IRS needs to put out guidance that not every educational credit is required to have a Form 1090. For example, lifetime learning credit, which follows the continuing education reporting regime, Since those courses are not for academic credit that leads towards a degree, they fall out of 1092 reporting. We would like to see instructions and published guidance specifically on Form 8863, which indicate to taxpayers that not every education degree credit is required to produce a Form 1098 or have a 1098 signed or submitted with their 1040. At that point, that ends my comments, so I'll open up to you guys for questions.
About the NRA exception, what kinds of information do you have on NRAs in making the determination about a student's status?
Specifically on our campus, we have an International Services Center which serves our NRA population. Every year, specifically for students that are receiving treaty benefits, they come in to perform a substantial presence test in order to be able to determine their NRA status and their U.S. withholding status. So if they were to receive a non-qualified scholarship, we have that substantial presence test calculated to determine if we need to withhold or not withhold a non-qualified scholarship. We also maintain their visa status, just to make sure that we're in compliance with any treaty benefits that would be allowed.
So you only perform the substantial presence test if somebody's getting a scholarship or a payment?
Correct.
You mentioned that under the proposed regulations, you'd have to report about 30,000 more 1098Ts.
Correct.
I was wondering if you could provide some more information on what that's attributable to.
That's attributable specifically to the loss of the exemption for Box 5 reporting. So right now, under current exceptions, if Box 5 exceeds Box 2 or 1, so if you have scholarships in excess of your qualified tuition-related charges or payments associated with those students are typically excluded from 1090 reporting. We have a large financial aid office, which a lot of Pell Grants flow through the university, and in large part, that increase in 1090s would be due to that. A student and athlete, for example, would be a classic example. So if you're a Division I athlete and you have a full ride to attend schools, typically all of your qualified tuition-related expenses are paid for through the institution, which would be a scholarship, and under the loss of this reporting exception, those students would not be receiving a 410.
Do you have any idea how many would be attributable to the NRA reporting? Because you mentioned that would require it. An increase as well.
That would be 2,000 per year, as of now. We have a relatively small non-resident population. I think more of the coastal schools would have a larger population.
Thank you.
You're welcome. Thank you.
Our next speaker is Beth Stapp.
Good morning. I join my colleagues in thanking you for this opportunity. My name is Beth Stack. I'm here from the University of Pittsburgh. We are a public institution with 5 campuses in Western Pennsylvania. Our total enrollment is approximately 35,000 students. In 2015, we issued about 44,000 1098Ts and received 1,100 phone calls and about 500 emails with questions simply related to the 1098T issuance for that year. I'd like to talk today a little bit about non-credit classes, about formal billing arrangements, and about students who exceed, whose gift payments exceed their QTRE, as well as payments from previous years, which is a topic that wasn't covered in the regulations. As you are probably already very aware, non-credit classes are very common, especially at large research institutions such as the University of Pittsburgh. We have non-credit classes that are offered through an arm, a branch of the university that offers leisure and learning classes. There are hundreds of classes offered in a calendar year, specifically to students who are 50 and older. They cover things from wine tasting to discussions about current political topics. They cover the history of symphony, things, specific operas. There are lots of leisure learning classes offered through the institution. Non-credit classes are offered through particularly our health professions schools, medicine, dental medicine, pharmacy, and nursing. And those courses are offered in order for people to maintain their licensure and their professional standing. In medicine, for instance, courses are offered not only in the classroom, but also through interactive online opportunities and CD-ROM, and through tape and very large broadcasts that are broadcast throughout the United States, particularly in our Transplantation Institute. The School of Nursing offers the same sort of thing, and so does pharmacy for continuation of licensure. Dental medicine offers classes not only on campus, but on 13 off-campus locations. And they're offering not only to just general practitioners, but also to specialists as well. The School of Social Work offers non-credit classes because licensure in social work is dependent on, as licensure for accountants is, continuing education opportunities. And we also offer through the School of Social Work an approved Act 31 Child Abuse Recognition and Reporting online training program that is required to be completed annually for all health-related professionals who are licensed by the Pennsylvania Department of State. Our School of Education offers non-credit classes for teachers of K through 12, for instance, in particular during the summertime. And those classes are both skill and subject related, as well as the types of opportunities that will allow teachers to improve student outcomes and success. Our School of Engineering offers workforce retraining opportunities through our Manufacturing Assistance Center. And the School of Law offers access to continuing legal education courses. All of these courses are non-credit courses. All of these courses are registered and paid at the point of registration with the school or department that's offering the course. There are no student accounts, there is no billing associated with this, and all of these courses are required to be paid at the point of registration for the course. So Pitt, like most other large institutions that offer wide varieties of these sorts of courses, has no centralized system for tracking any of these enrollments or payments for these courses. The courses are not graded, so the students don't receive transcripts. And because we have no accounting records for these in our main accounting system, they're completely decentralized throughout the university. We are very supportive if you're maintaining the exemption for reporting or non-reporting on non-credit classes. Formal billing arrangements. They vary all over the place. I'll give you some examples at Pitt. We have a very active graduate school of business, and our CATS Graduate School of Business is very commonly called in by companies throughout Western Pennsylvania to assist in designing a curriculum that is designed specifically for a purpose that that company wants to utilize for educating their employees. So CATS faculty will go in, design the curriculum, deliver the curriculum, almost always on site. The students will probably receive a certificate for completion of the program, but the company is actually going to pay the School of Business for this instruction. The students are not enrolled at the university, they don't have transcripts at the university, and they will not have accounts at the university because the company is providing this generally as a perk for employees or employees who may be in their management program. We have programs like that that are offered throughout our 5-campus system. They're offered to companies like Zippo, our Bradford campus in Bradford, Pennsylvania, or Dick's Sporting Goods through the Pittsburgh campus, and that's one of the CATS opportunities. Our campus in Greensburg, Pennsylvania offers programs such as this for Westmoreland County, so a municipal authority where they're trying to enhance management opportunities. So these kinds of formal billing arrangements, which are arranged with the school, really have one thing in common, and that is the student has no account at the university. And therefore, we really couldn't report those sorts of opportunities on a 1098-T, nor do the students expect us to, because they understand that these are arrangements that are made between the university and their company, and that the company is providing payment for them as an opportunity for them to advance their education. College and high school. Those programs are very common throughout the country now, and they're the same sort of formal billing arrangement frequently. There are lots of different models for college and high school. And college and high school programs are very large. We have over 3,000 students involved in our college and high school from 125 high schools in the greater Pittsburgh area. There's also a small program at our Bradford campus for college and high school. And these are dual enrollment programs. So at Pitt, these students actually do have student accounts. That, however, is not the common model. The common model is that the school district may contract with the college or university, particularly if it's a community college. And the school district will reimburse the community college for the total enrollment of students in their district. So the students enroll in classes and earn college credit and have credit recorded on a transcript, but there is no student account for the student because the district is actually paying the college for the opportunity for the students. Sometimes that contract between the college and the district provides for unlimited enrollment in the classes. Sometimes it also provides for the training of the teachers because these classes are frequently taught in the high schools and not on the campuses. And finally, some schools encourage their teachers to earn advanced degrees, and they will sponsor that effort, usually for 1 or 2 classes a semester. And some districts will actually pay for their teachers to be educated at a college or university nearby. And they do that again through a formal billing arrangement. So the student actually is enrolled for the classes, they earn a grade, they have a college transcript, and they will earn a degree. But it's the district that has contracted with the college or the university, and it's the district that's paying for the coursework. So there is no student accounting record under that particular model. Since programs like these have no personal student account records associated with them, a 1098-T can't be produced by the college or university, so we oppose the elimination of the exemption from formal billing arrangements. Like the majority of schools, Pitt's been issuing 1098-T forms to students whose scholarships or grants equal or exceed their QTRA, which is reported in box 1, scholarships and grants reported in box 5. We've been issuing 1098-Ts to those students. And the majority of schools that responded to NACUBO's recent survey have been doing so as well, which didn't surprise us. Mainly because the cost of textbooks and supplies has increased so dramatically over the past several years that it's our belief that even if it appears as if a student may not initially qualify for tax credits, they may in fact qualify for tax credits based on the cost of their books and supplies. Books and supplies, particularly in the natural sciences and the professions, are very expensive. And books and supplies for students in the social sciences and natural sciences tend to be fairly costly as well because they have more books per course. So rather than exclude those students from the ability to determine whether or not they would qualify, we provide 1098-Ts so that they can exercise that option if they do have enough expense that would help them to qualify.
Just want to keep in mind your time's almost up.
Aha, payments from previous years. This is really an issue. The issue is that Section 25A specifically says that QTRA should not be reported for enrollment periods that are not included in the reporting year, where Section 6050S appears to require us to report even if enrollment for QTRE for which payments were received was not in the current reporting tax year. So for 5 seconds, should I use them or would you like to ask the question?
5 seconds. Be my guest.
So we're at a conundrum. The entire community is confused about what to do about this reporting requirement. 6050S says you have to report qualified payments that were received to pay QTRE that didn't occur in the reporting year. And that's counter to what 25A is telling us. We are opposed to reporting any payments that were received for enrollment periods that were not included in the reporting tax year.
Thank you.
I have a question on that.
Okay.
So if you have somebody that has a bill for the fall semester in year one, right?
Mhm.
And so now we go to year two, and there's enrollment in year two for the spring semester, and you get a payment. How do you allocate that payment? Do you allocate that payment to the fall semester year one, or are you allocating it to the spring semester year two?
That's a great question. Most of our payment methodologies and most of our campuses, particularly for cash payment, is always going to pay the oldest charge that is unpaid on the account. So in your example, let's say that we had charges for fall 2015 that remained unpaid. And at my campus, that student would receive a hold and wouldn't be able to register during the normal registration period for the new term that begins in January, the spring term. But let's say that student pops up in January and he has payment for the fall term. So he's going to make payment, he's going to make a cash payment in January of 16 for fall of 15. So under 6050S, it appears as if you would like us to report that payment that was made that paid QTRE for fall term 15 on the 2016 1098T. And that 1098T then will include payment for fall term 2015, spring term 2016, summer term 2016, fall term 2016, and very possibly spring term 2017 as well. At my school, we begin billing for 2017 spring term in November. So we will start to receive payments in November and December for the enrollment period that will begin in January, February, and March. So reporting that payment that was received in 2016 against 2015 unpaid balances is going to dramatically inflate the amount that's going to be reported in box 1 for payments received toward QTRE. 25A specifically says that you're not supposed to be given credit for those unless those payments apply to enrollment periods that occurred during the reporting year in the first 3 months of the next tax year. So there's tremendous confusion in the community about what you intend for us to do.
I mean, I guess I would point out that 25A, the reporting never has been a perfect match, right?
Well, I think that the problem is that tax years and academic years
Don't match.
not in any way, shape, or form. It's very difficult.
Right.
And trying to explain to people what's included
Yes.
in box 1 is very difficult. Our 1,100 phone calls, I have a confession to make. At Pitt, when we first started reporting on 1098Ts way back in '97, we were reporting box 1 before the box 2 option was available. We fled box 1 reporting to box 2 when we implemented our new student system in 2005, 2006. Our phone calls from box 1 reporting were easily double the number of phone calls that we received because we can at least explain to people in box 2 reporting what is in that box and why it's being reported. Box 1 reporting is very complicated because the tax year and the academic year are in such misalignment.
I have a question about formal billing arrangements. If a student is, or their parent is paying on an installment basis, would that be considered a formal billing arrangement?
At some schools it is. There are a couple of different models for that. At Pitt, let me not explain it, Pitt. At many schools, the model is, and it's very common, the model is to transfer the balance of the student account, transfer the student account balance to another receivable, to a loans receivable or a payment plan receivable. So it comes out of student AR and it moves over to a loan receivable. And that means that it looks like the student account is paid in full, but what's happened is the family has contracted to make installment payments over a period of time. That lump sum transfer clears the account. But the installments are coming in very, dribs and drabs over a period of time. So I'm not really sure how those schools are going to accommodate box 1 reporting that use that model, and that model is very, very, very common. In our model, we leave the balance alone. We put the student on a payment plan, and we record the installments as they come in. So we'll be able to record installments even if they cross over the December-January divide for the spring term. But it's going to be complicated explaining to parents why this little piece of spring term was recorded on this form and this other little piece of spring term was recorded on that form. But yeah, that's a real challenge. And there's a lot of communication in the community right now about how they're going to handle payment plans.
Thank you. Our next speaker is Patrick Quinn.
Good morning, thanks for having me here about 1098Ts. It's one of my most favorite topics. I could spend the rest of the morning talking about this. Is just amazingly complex. I'm Director of Student Fiscal Services from George Mason University. We have 33,000 students roughly every semester. Our unduplicated headcount in 2015 was 44,000 students, and we're filing about 39,000 1098T records each year. Our staff is getting an incredible amount of questions on this. My goal and the reason for being here is to do whatever I can to kind of communicate the challenges that we're having. I'll talk about some of the certain areas, some specific examples that we're seeing or that kind of look like mesh with these proposed rules and that may be common across the board, may not be common across the board. We have a Korea campus and we're billing $450 million annually. The first proposed rule, the enrollment by calendar months, really complex to try to put that into our system. Right now, we're not doing it. Different numbers of credits can be considered full-time based on context. So you could be in summer, and that might be full-time at 6 credits because you're taking classes every day of the week. When you're in fall, it could be something different. We have modular courses where you're taking courses really compacted. We have online courses. We also have independent study flexible courses that start and stop at different periods. Sometimes registration adjustments are backdated, so the student may sit in a class and then actually have it added later on. So depending on the enrollment, if we're trying to track it by month, it might not be accurate. Even though the student was in the class, we're not getting their registration until later on. Not very common, but it happens. The study abroad and internships are often between semesters, but they're going to count for one of the semesters or the other, and that's what the example I'll share in a few. The new students and spring graduates will be eligible for tax credits, but they're going to have a very low. So if I have a spring student, students graduating spring, and they're in a modular program, they're taking the 8 weeks, 2 months, they'll have like 2 months of full-time enrollment for a year, which is not, they may be qualified, but it's going to look like they weren't really full-time, then maybe they dropped out or something when they in fact graduated. The example I'll share is a study abroad. So we have a study abroad program. Study abroad program may carry 3 credits before the spring semester. You got 3 credits, students goes to study abroad, gets the 3 credits, may or may not be registered till they get back. Then they're in a modular program, so they have 6 more credits for 2 months. They're still not full-time. Then they have 6 more credits for 2 months. They're still not full-time. But for the spring semester, they're in a total of 15 credits. So they're really, if they were registered all at once, it would be full-time enrollment. But for this case, they're not going to have any months of full-time enrollment if we're reporting by month. Alternative I thought of was just maybe instead of trying to do this by month, if we're interested in looking for full-time enrollment, maybe the simple checkbox that we do for half-time enrollment. If they're full-time at any time during the calendar year, the tax year, maybe just check the student was a full-time student, rather than trying to calculate what month they were and what month they weren't. The next area is the TTR calculations for the first 3 months of the following year. It's important that we know this, but trying to calculate the specific amount of this is difficult, and it's going to lead to some errors and some confusion and maybe some taxpayer errors too. You've got, the student accounts are very, very flexible. They change all the time. Accounts are added, charges are added, classes are added, the charge goes on, the charge goes back off, a payment is made, a return check comes in, financial aid post, a refund goes out. It's really convoluted. But the example with this is we'll cover students' fall tuition with a memo credit, it's not a payment, when we have an agency billing. Some of the agencies are really late, such as the vocational rehab, VA is late with their paying. We might not get a payment through the end of December for the fall billing, but a student's making a payment, that payment's gonna go back. Instead of paying for spring, it's gonna go back and it's gonna pay for fall. So it's not, or it may pay for part of fall, it may pay for full fall, part of spring, so we're not gonna be able to capture it correctly. Then when the VA payment comes in, that payment is going to post to the account. We do an application and a reapplication, and then it's all gonna kind of like settle, but that may not happen until January. So trying to capture the exact amount, the specific amount of tuition that's being paid or QTRA that's being paid in the future semesters, I just don't see it being accurate in many, many cases. And the last topic is the QTRA being paid first, and the recommendation is to not mandate that, but to have it as a safe harbor. As previously mentioned, the oldest charge is paid first in many systems. As I just talked about, that oldest charge first may or may not be in the right semester because of the memo credits. But if you tie a payment to a charge, which some systems will do, our systems won't do it, and then another payment comes in, that second payment is going to sit there unapplied, and it's not going to cover anything. And it's going to look like the student has a balance because there's going to be a charge on an account that's left unpaid. There's reports now that we work, that they can be multiple page reports where we try to get these, capture these right now with some of our application and payment problems. So, I mean, one of the examples of, so if a payment comes in, a cash payment comes in, it applies to QTRE. Then we have another payment comes in, which is an employee tuition exemption, which has to apply to tuition. If we tie that cash payment to QTRE because it came in first, then we can't take that exemption and apply it to QTRE because the other one's already paid first. So that's going to sit out there. It won't pay for housing or anything, or any of the other charges. So it creates issues, it's systems issues. So some systems will do it. I think PeopleSoft will do it, but not all systems will do it. And there's a variety of different systems for schools. So some schools may say, hey, this is a wonderful idea, our system will do it, let's go ahead and move forward. But other schools like myself, it won't. So that's why I'm saying safe harbor rather than a mandate. Another example of how this may or may not work. So we have payment plans. Our payment plans are managed by us. We put the same memo credit on there, we leave the balance on the account. Our payment plan for fall opens on July 15th. July 15th is the first installment, August, September, October 15th. At the same time, summer is open. So we have students registering and paying for summer, and they may be registered and paying for fall at the same time, in the same month. So you've got those payments, and then if they add a summer class, and they've previously added a fall class, your oldest charge is now the fall charge. So that payment goes back, could pay for fall. But we got the memo credit covering everything, so their balance is taken care of. But you've got, just talking about the complexity of the student accounts, that's just one example with the payments. Between the direct paid payments not applying, and then these payments kind of all being commingled in two terms at the same time, we've got pretty much a convoluted type of a situation when we have two terms open. It's very difficult even for us to manage the billing and stuff. We have different workarounds that we deal with our student systems, which aren't always ideal. So I guess, in conclusion, I think allowing the schools, my recommendation is allow the schools as much flexibility as possible to report within the system's capabilities, and that will yield the best results. So you've got the system that will allow the direct payment. So that's fine. They'll do the direct payment, and that will work for them. For systems like ours, maybe doing a computation by year. You've got, these are your QTR charges within the year, these are your QTR payments within the year, payments of QTRE up to QTRE, and that's on the 1098T. You're still going to have the payments of QTRE. Either way you go, you're going to have the same end result. You're going to have payments of QTRE on the 1098T. It's just how does the system actually get to that point? So mandating how we get to that point, maybe giving us the flexibility to do that reporting, because we all want to make it as clear as possible, because we're getting these questions and we're trying to help our students do the right thing and file a correct tax return. And as previously mentioned, it's in the previous version of these 1098T reporting with the amounts billed, and these enrollment periods being different, we're never going to get to a plug and play where we can take this form and make it to where a taxpayer can use it for the tax return in and of itself. And then what we do when we get these policies, like, this form is to help you, it's for guidance, but you need to go back to your payment receipts. We can give you your account statements, we can give you your transactions by date. This is what you need for your tax returns. The 1098-T is there, it's helpful, it's for you, it's what we're reporting to the IRS, but you need to go back to your account when you're doing your tax return. You need to go to the IRS publications to do this. So that concludes my comments, if there's any questions.
Thank you. Thank you. Is there anyone else present today who was not included on the speaker list who would like to give a presentation for this notice of proposed rulemaking? Okay, seeing that there's no one, this will conclude our hearing for today. I want to thank everyone for coming, especially our speakers who've traveled, in some cases, quite a distance to be here today. Thanks again.